There are still less homes on the market than there were last year, though housing inventory is still increasing every week, and we're only 5 days away from last year's inventory peak, which was October 28th. Existing home sales are down 15.4% in America, yet prices are still up 2.8% from a year ago. Cash buyers are returning as rates get above 8%, and we've got a lot to cover today, so let's get started. My name is Michael. I'm a local real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be looking a seller to get top dollar for your property, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like in the next 30 to 90 days. We're looking at things like median list price, days on market, how many homes are having price decreases, and what's inventory looking like. And if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest both cities and zip codes in all of Dallas and Collin County. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is October 23rd. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to see the latest market update. First up is market news, and today we'll be referencing a report from the National Association of Realtors covering last month. And all the data we're covering here is national, not local. And the long story short is there are still too many people chasing too few houses. Okay, very quickly, let's look at the key points of this article. The first up is that according to the Realtors Confidence Index, properties typically remained on the market for 21 days in September, up from 20 days in August, and were 19 days in September of 22. So we went from 19 to 21 days, and 69% of homes sold in September were on the market for less than a month. An important thing to note is that days on market, of course, is seasonal. This time in the year, we should be seeing higher days on market. However, in a regular market, this number would be above 30 days. So the point for me here is there's no significant change. So if you're expecting a market crash, it's just not showing up anywhere at this point. What we're seeing is the slow grind of things slowing down as they do this point in the year. We can see here, cash buyers are up year over year from 22% up to 29%. That makes perfect sense. With rates going up, people don't want to pay that high interest. And another interesting stat is we can see that first-time home buyers have moved lower year over year from 29 to 27%. So not a huge change, but it's obvious first-time buyers are heavily impacted by rates as they have no equity built up in their previous home. And a side note here is we talk every week that higher rates curb demand. And the obvious reason is that less people want to pay higher interest rates. But what we don't usually talk about is that even a 1% rate move up means that millions of home buyers are now no longer qualified. Because a 1% mortgage increase now means you can afford about 12% less house. So if you were approved for a $400K home and rates go up 1% while you're looking, you're now only going to be approved for about a $350K home. Well, if you couldn't find a suitable home yet at $400K, you're certainly not going to find it at $350K. So you're now priced out of the market entirely. So every 1% rate move knocks millions of home buyers completely out of the buying pool in this way. So of course, obviously you have the people who just don't want to pay higher rates. They say, I can afford it, but I'd rather wait and see if I can pay less interest down the road. That of course decreases demand, but I also want you to be aware that these rate moves literally knock millions of people in or out of the buyer pool as they go up and down every time. Okay, let's start with national housing inventory. We saw a smaller jump in active listings from the previous week with an increase of only 7,900 homes in the country compared to last week's increase of 9,418 homes. And as you can see here, nationally, 554,350 homes compared to last year's 572,000. So you can just see here that there are less homes on the market today than there were a year ago. And of course, to get back to a normal market would be somewhere way up here, close to 1 million homes on the market. So we're just barely over halfway to getting back to a normal market as a nation. So the good news is inventory is still continuing to increase. The bad news is it's not as fast as we want it to, and we're still 17,594 homes short of where we were last year. And as mentioned, the seasonal peak last year was October 28th. So we actually only have 5 days left of inventory increasing before we hit that date. And if last year is an indicator, inventory would start dropping then. However, with mortgage rates climbing the way they have been, I would be very surprised if inventory stops climbing in the next 5 days. So it's going to be very interesting to see how late in the year will inventory continue climbing, because normally it stops way sooner than this. Last year's October 28th, that was late. This year it's looking like it's going to be even later. Now let's look at new listings. After trending below last year's new listings, so this is the new homes being listed every single week. So we were obviously trending way below the previous 2 years fears most of the year. It looks like we finally caught back up, which is great. And this is really unexpected for me because with rates going above 8%, I was expecting a sharp drop off of new listings. Because remember, most of these people listing their home are then turning into buyers. Very few people sell their home to become renters. So if you're listing your home on the market right now, you're committing to basically buying at an 8% rate. So that was something I did not expect. I thought there would be less people listing their homes because they were going to say, forget it, 8% is too high, I'm not going to buy at that. So this is just more evidence to me that people are just getting used to these higher rates. They're just accepting this is where they are. There's no reasonable expectation that they're going to go lower. If we want to move, this is what we're looking at. And this might be as good as it gets for a long time. 3, 4, 5, and even 6% rates may be a thing of the past for a very long time to come. So new listings are starting to look good again. It's great that we didn't drop off. And if we can end the year anywhere between this 21 and 22 level, that would be great. Of course, as you saw, we were trending below. It was seeming very likely that we were going to end up somewhere down here, which would have been terrible. So if we can just catch up by the end of the year here, I think that's going to make a great start for the beginning of next year. But all you need to know looking at this chart is that every single week you're going to have less and less new homes to choose from. So if you don't like what's on the market now, you're probably not going to like it moving forward because there will be less new options to choose from. As inventory continues to increase, that is not new homes. That's homes that you already see and you already don't want. So yes, fewer and fewer great homes will be coming onto market, which means if you're looking to buy a home, you need to be already working with an agent, already pre-approved and ready to go when those few great homes actually do hit the market, because there will be some, just not many, and whoever is ready is going to get it. Now, on the other hand, if you're an investor just looking for a rent grade home, you're going to have plenty of options to choose from. Okay, let's move on to mortgage rates. So we started last week, October 16th, at a 7.8. We went all the way up to 8 and then 8.03%. We ended Friday at a 7.97, but even better than that, I have some good news for you. So far today, the 10-year is rejecting hard off of that top level. So this was the 8, the 8.03. This black candle closed down here. That was a 7.97, and it tried to shoot up again this morning, got rejected very quickly. So we definitely should be below what we were Friday, but we won't know by how much until I think it's 3 or 4 p.m. that it posts the average for the day. And hopefully that's going to mean some relief in the coming days and weeks. This makes 25 consecutive weeks with rates around or above a 7% now. And I say this number every week because I think it's important for you to understand how buyers are adjusting to these higher rates. So for more than half of the year now, we've been at least around or above 7%. So to hear 8% might sound crazy if you were looking 2 years ago, but most buyers in the market right now have never been quoted anything below a 7%. It's likely they've been quoted above a 7% the whole time they've been looking. So to go from potentially 7.5% up to 8% is not that big of a jump. If all you've ever known is 7.5%, then going up to 8% has not dramatically changed your life. You're still going to keep looking for a house. Now, regarding mortgage purchase applications, we saw another 6% decrease this week. So 6% less people applied for a mortgage this week, and this makes for a total of 18 positive, 21 negative, and 1 neutral print for mortgage purchase applications this year. And if you think that just because rates are up above 8% that you can no longer afford a home, I promise you still can. There are still ways anyone can get their rate and their monthly payment down to an affordable range, and I made a detailed video on this you can see here. So before you lose hope, make sure and watch this video. Okay, now we're going to quickly take a look at the MLS data this week. Starting with Dallas County, we had 252 closed sales. That's 22 more than last week. 245 went under contract. That's 13 less than last week. 482 new listings. That's 30 less than last week. Of the homes that closed, 62 were immediate sales, meaning they contracted within the first week. That's 11 less than the previous week. In total, there are 2,072 homes either under contract or in pending status, and that's 17 more than last week. Now moving on to Collin County, we had 244 closed sales. That's 85 more than last week. 109 went under contract. That's 41 less than last week. We had 319 new listings. That's 10 more than last week. Of the homes that closed, 62 were immediate sales. That's 26 more than last week. And in total, there are 1,636 homes either under contract or in pending status. That's 31 more than last week. So in general, we had quite a few more closings, less executed contracts, and less new listings, at least in Dallas County, as can be expected this time of year. Collin County saw a big jump in both closed sales and immediate sales. Okay, let's move on to housing data. We're looking at Dallas County as a whole. We're starting out with the Market Action Index, which just takes all of this information, puts it into one easy to read graphic. Anything at 30 or below is a buyer's market. Anything above that, we're asking how much of a seller's market are we in. So in Dallas County, for the first time in a while, median list price stayed about the same. It only dropped $450. Median price of new listings, however, saw a bit of an increase. Median days on market remains at 42. The number of homes having price decreases, we'll zoom in on this in a minute, about 46%, no significant change there. Inventory continues to climb just a little bit. What is that, 85 homes? So inventory climbs a little bit more. Market Action Index, actually another small drop this week, but we are still at a slight seller's advantage. Remember, a 45 and up was a strong seller's advantage. We're now down to a slight seller's advantage. So basically, since rates have started shooting up, we've just seen a slow, steady decline. Of course, July, this is the hottest market. So from then until the end of the year, you would expect to see the Market Action Index dropping as things cool off. But looking at the number of homes with price decreases, this week was at 45.82%, almost no change from last week, 45.23. But what you need to see is that 1 year ago this week, we were at 46.21. So less homes are having price drops than they were last year, as well as in a normal market, which was 2019, 46.89. So less homes are having price drops now than they were in both last year and 2019. So if you're someone who thinks there's a market crash, again, there's just no evidence showing it yet. Now we're looking at the same data over in Collin County, and their median list price has been holding real steady. It saw a small drop this week, but look, all of these weeks it's been around that 600. Today we got down to 595. Median list price of new listings, just like Dallas County, is climbing though. Their median days on market as well has remained at 42. Number of homes having price decreases has been a lot steadier, and we'll zoom in on that in a minute. Their inventory finally saw a small tick up from 2,057 to 2,108, but you've got to remember all year long, look at this, since July 21st, they had 2,015, and now they're up to 2,108. So inventory has almost not climbed at all through this entire year. So it's unusual to see inventory going up. We'll have to see if this continues, but like I said, most of the year it's just been completely flat. If you'll see, their Market Action Index is actually still a strong seller's market because it's a 45. So it is one number hotter than Dallas County right now. And then again, looking at the number of homes having price decreases, this year we're at 48.15. We're down from a few weeks ago. We got as high as 50. So less homes having price decreases now with 8% rates. That doesn't sound like a market crash. And then of course, comparing to a year ago, we were all the way up to about 53. And then back in 2019, we're at 50.48. Okay, now we're moving on to the top 10 ranked hottest and coolest cities and zip codes. This is in all of Dallas and Collin counties. This is using that same Market Action Index number. So we're starting out with the absolute hottest cities. Carrollton remains the #1 hottest city this week. Coppell actually heats up 1. Irving heats up 3. Louisville cools off 2. Garland cools off 1. Richardson cools off 1. Plano heats up 3. Balch Springs remains at number 8. Grand Prairie cools off 2, and Mesquite cools off 1. So remember, a 45 and up was a strong seller's advantage. On the hottest list, the coolest city on here is a 49.58. So any of these cities are way beyond a slight seller's advantage. So you saw that Dallas County as a whole was at a 44, but if you're looking to buy in Dallas County and Carrollton, you're really looking at a 63.66, so much hotter than Dallas County. Now we like to zoom in and look at specific zip codes. The absolute hottest is Carrollton, 75010, followed by Garland, 75041, Carrollton, 75006, Irving, 75063, Irving, 75060, Carrollton, 75007, Plano, 75075, Dallas, 75249, Louisville, 75077, and Grand Prairie, 75050. So again, if you are looking in Carrollton and you're looking in 75010, this is even hotter than Carrollton the city and much hotter than all of Dallas County. Now we're doing the exact same thing, but for the coolest cities and zip codes. The absolute coolest remains Leonard, Texas, and this is the only buyer's market in all of Dallas and Collin County because it's the only one below a 30, followed by Sunnyvale, Whitewright, Salina, Van Alstyne, and Ferris all keep their spots this week. Blue Ridge jumps onto the list. Rockwall cools off 1. Royce City cools off 1. Farmersville heats up 3. So Farmersville is nearly off the coolest list. It heated up 3 this week. And Seagoville, which was number 8 last week, heated up entirely off the coolest cities list this week. Now let's zoom into the zip codes. Leonard, 75452 is the absolute coolest, followed by Sunnyvale, 75182, Whitewright, 75491, Salina, 75009, Van Alstyne, 75495, Dallas 75219, Dallas 75220, Grand Prairie 75054, Ferris 75125, and Rockwall 75032. That's it for this week. I would really love some feedback to know what types of videos are you enjoying that I'm making? What do you want to see more of? I'm currently focusing on the most affordable new construction all around the area because I think that's really going to benefit a lot of people because of the incentives and low rates they're offering. But if there's something else you'd like to see, please comment below so I know. As always, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. All that info is in the description below. Thank you for watching. I'll see you in the next video.